Razia, I've just introduced you to the audience. Thank you for joining me. And so we're doing some time travel. It's Friday afternoon in South Africa and midday in London, and we are wedged between some rather remarkable events, including a new head of state, a State of the Nation address that happens on Friday evening, and a budget to be announced in a couple of days' time. What do you make of this?
There's a lot of optimism regarding South Africa right now. We've seen it in the price action in the currency since mid-November on the expectation that a Ramaphosa victory in the ANC leadership contest would bring about rapid change, would bring about better economic prospects. And more recently, on the fact that Ramaphosa has been elected president of South Africa, we've seen a very strong reaction across local currency bonds. So the clear message from financial markets is there is an expectation that this is going to be positive. There is an expectation that this will revive consumer confidence, investor confidence, and even though the South African economy faces challenges, it has been stuck in this place of incredibly weak growth almost since the global financial crisis. There is this sense of positivity that things can now turn around.
If I can just rewind you on one aspect of your comment, you spoke about currency markets and bond markets starting to firm as early as November of last year. Is this possibly a case of markets knew something? Is that fanciful, or do you think markets saw something that was hard to see elsewhere?
Markets always tend to be forward-looking, and so they have to pay attention to what is likely to happen in the future. What was the case in November was that South Africa got downgraded by Standard & Poor's, lost its local currency, investment grade rating, and Moody's put South Africa on watch for a potential downgrade. Looking at the political dynamic in South Africa, markets were essentially, investors were taking the view that if Ramaphosa were to be elected, if the leadership of the ANC were to change, then we would see a reversal of some of the factors that had led to this credit deterioration in South Africa, that there would be an effort to improve governance at state-owned enterprises, and we've seen a lot of changes early on in the year, that there would be an effort to try to limit the growing debt burden that the Treasury might face because of weakly run state-owned enterprises. That idea has been reinforced as well. And of course, the final test is going to come with the budget. Has there been a policy shift soon enough to be able to draw a line under the fiscal deterioration that has happened already? Are we going to see from the budget a different fiscal plan being put forward for the near term and the medium term that says fiscal conservatism is important. Yes, there are spending priorities, but this is what we're going to be trying to do to bring the budget deficit down. And so the previous debt numbers that had been outlined in the medium-term budget that looked at rising debt to GDP ratios in South Africa, breaching the 60% level over the medium term, maybe that scenario can be averted. And very crucially for the market, maybe that will be enough to stop Moody's downgrading South Africa. Were that to happen, if South Africa loses its local currency investment grade rating from that third ratings agency, then it could be subject to significant outflows of capital.
Yeah, and the numbers that we're talking about there are quite big in terms of potential outflows, 100 billion plus.
Yes, the numbers have shifted around, and there was always this sense that it's very difficult to estimate exactly how much investment has been passively tracking the World Government Bond Index, but the numbers spoken about ranged anywhere from $6 to $10 billion. So very significant, and it would certainly have an impact on the rand, even if it were to happen now. So the key point point that we're taking from a lot of the price action that we've seen, especially in currency markets, is that this now appears to be much less of a risk. Of course, the budget presented on Wednesday the 21st is going to be a key test of that. Ratings agencies have been giving South Africa the benefit of the doubt for a long time. But if we don't see any real effort at consolidation, if it's something that's promised 3 years ahead, that the deficit will only decline at some point in the medium term, that may not be enough any longer. The debt ratios have reached very worrying levels.
If I could put you into a true economics role and ask you to make a forecast, perhaps now more speculation than forecast, if the ratings agencies were to hold the line that they had adopted through the course of 2017, and we haven't done enough around the announcement of the budget, and it looks like we get downgraded, what do you think where could the Rand land up?
Well, the context matters absolutely. So a rating agency downgrade in the context of expectations that it's only a matter of time before growth picks up in South Africa, because there is positive sentiment, it's only a matter of time before we see deeper reforms. That downgrade, if it were to come, and it's not our base case scenario that it does come, certainly not as soon as March, if it were to happen for the sake of argument, it might have a more muted impact on flows, even given whatever level of passive tracking of the index there has been. To explain that in layperson's terms, if investors are actively tracking an index, maybe they've already decided South Africa represents a certain amount of risk and they're underweight that index. The fear has always been about the investors who are much more passive trackers. That is, they buy South African government bonds because it's included in some global index that everyone is following, and they will only move out of those positions once South Africa is formally excluded. So that creates a lot of risk just because you have a large amount of capital moving in one direction. But my argument is that context matters, and the fact that we've seen the Rand rallying as strongly as it has suggests a great deal of positivity that investors have towards South Africa.
So in the same way that markets were forward-looking in November, you think they're taking the exact same stance here and saying there's a lot of good news in the tunnel, and that good news will translate into economic and institutional action?
Sure. The risks of a significant currency move have lessened, and this is partly because of South Africa's specific factors. The Rand has outperformed other currencies since that period in November, December, but it's also because of global factors. We have seen a weaker dollar recently, and this is also a driver of what is happening to the Rand. So, yes, what matters is what the budget is going to unveil. There is an expectation that time has run out for South Africa. There's got to be more commitment to reform. That's got to be made real. But at the same time, it would be very difficult to ignore this basic optimism that everyone has, that we're now seeing a turnaround. We now see a realistic chance of a turnaround in the economy, and that will make a big difference to everything.
It's a wonderful note to end on, giving a sense of perspective and a realistic view and assessment of the South African circumstance that for the first time in a long time is encouragingly upbeat. Thank you for your time.
Thank you, Adrian. Very good speaking to you.